Hello, everyone. January 21st, 23rd, sorry. And now let's analyze the current situation with Bitcoin. Overall, it's a short position, but locally, it's not clear at all what to do. So, first of all, this is Bitstamp for me, and this is the second take. Let's switch to, what's it called again? To Binance quotes. I just have my markup here. Look, I've marked each time frame with a letter, right? So W is for week, month, day, 12 hours, 4 hours, 1 hour, 15 minutes, 5 minutes. Just in case someone isn't aware yet. There we go. And now let's take a look. Now pay attention. The 1 hour time frame, if we look only at the PP indicator, the very bottom red line. The 1 hour time frame is currently pointing down, right? Look, the previous hour closed below the 50-hour moving average. Although that's not a decisive factor, we tend to hover around it for a while, but this is the first touch of this average in quite some time. In fact, we've kind of squeezed up against it or stuck to it, almost magnetized to it, which means we could very well drop down and continue the decline. But the hourly chart is currently leaning more to the downside. The 4-hour chart is overbought, right? It also seems to be pointing down. We're trading below all the moving averages. We've tested the nearest one, or came close to it, the 200 period, right? I'm not considering the 300 period in this case. So the 4-hour chart is pointing down. The 12-hour chart is oversold and hinting at growth. Damn, so what do you do here? The 4-hour and the hourly are pointing down. The 12-hour is for growth. The 12-hour is prohibiting it. Well, it says you need to be more careful with shorts. And the 4-hour and hourly say you need to be careful with longs. The daily candles, here the situation is unclear, but this kind of global trend line has been broken. It's drawn through two neighboring lows, I think from March 2020 or something like that, but it's been broken, right? On the weekly candles, it seems like we're trading above the 100-week, right? But at the same time, we've already made a bunch of attempts to approach the 50-week, and so far it hasn't worked out for us. Moreover, we risk getting a bearish engulfing on the current week. It's very important how this week closes. I don't rule out that we might see some very massive crash, or maybe we won't. At the same time, we have a mathematical target for growth in the area of 97,500. Yes, we've already been there, but this target appeared after we had already visited that level. And well, again, the 50-week level seems to be calling for a move in that direction. And yes, the PP indicator also points a bit more in favor of growth. But I want to emphasize that you shouldn't focus on just one indicator. That is, we should always consider everything in a comprehensive way. Now, let's take a look at the monthly candles. Why is it a global issue here? Yes, and the overall situation is unclear. The 4-hour chart is pointing down, the 12-hour chart is pointing up, but at the same time, they're all below the moving averages, so maybe there isn't any top here at all. And being oversold is not a guarantee of growth, just as being overbought is not a guarantee of a decline. But I'm explaining this to you. If everything were aligned, say the 1-hour chart is oversold, the 4-hour chart is oversold, and the 12-hour chart is oversold, then the probability that the trend would reverse upward on at least one time frame would be several times higher. But since we have one going into the woods, another for firewood, a third swimming, and a fourth, I don't know, picking flowers, it turns out that you can't make trading decisions here. But maybe you can make them from the perspective of the monthly candles. First of all, if we look at the monthly candles, the PP indicator is clearly pointing downward and is directed towards the screen zone. So there isn't even anything close to being oversold here yet. We had a very strong divergence here with the PP indicator. Well, let's turn the chart around now and I'll show you the divergence in case anyone doesn't understand, and everything else as well. And there's a lot to talk about here. So look, we take a segment here, right? We connect it, draw it along the highs. I'll make it black for contrast so it doesn't blend in with the indicator itself. So it goes along the highs. Well, you can tweak it a bit if you want, but let's just call it that for now, right? That's roughly the trend for the indicator's highs, right? And how do the price highs behave? The price highs behave like this. Well, that's just the divergence. It can happen with any indicators. Next, pay attention. The blue curve has been broken. I told you that the blue curve is an indicator. If it breaks downward, it signals a risk of decline. If it breaks upward, it signals a risk of growth. Here, we broke upward and moved higher, but then there was a rather deep pullback. However, we didn't break below the blue curve and continue to surge upward. Here, it broke and continued downward. Here, it broke upward and continued upward. And now we've broken through this curve. Let's zoom in a bit. We broke it downward last month. This points downward. We have mathematical targets for a decline. One is in the 70,000 range. That's a strong target. The second target is in the 37,000 range. And in the 30,000 range, or rather in the 33,000 range, we have an untraded zone on the monthly candles. Take a look. In the past, yes, there was an untraded zone. Here it is, the untraded zone, the pink target. Eventually, we worked through it and covered those zones. In fact, that's exactly where the price stopped, right? After that, it didn't go to the lower boundary of the target. That was the 12,000 I mentioned, and that one subscriber kept reminding me about, like a nagging fox. Now look, if we remove, I do not really know how to remove it here. Alright, let's just not remove it. Look, this green curve here, see? That's the 50-month moving average. And this little segment here, that's the 100-month moving average. Bitcoin has already dropped down to the 50-month average. It has, right? And if we assume that it breaks through this global trend line, which connects March 2020 and November 2022, it looks very similar to the one on the daily chart, but it's a different one. That line is drawn based on two lows within March. But it's amazing how they coincided. One is based on the March lows, and the other connects lows that are almost 2 years apart. Nevertheless, the lines are quite close. So if we break through this line, and the targets for a decline, the untapped zones, the break of the blue indicator, this blue curve, all point to that, then we risk heading toward the 50-month average, or rather the 100-month average. And again, this is not some kind of fantasy, because below 40,000 we have a downside target, but its upper boundary is 41,300, let's say 350, and the lower boundary is 33,500, so that's how it looks. Now, pay attention to this. Right here in 2022, in January, there was a drop, right? Moreover, with this candle, we engulfed that large growth candle. So 1, 2 on the third month. We didn't engulf it on the previous one. So formally, the trend reversed here. It reversed in 3 months. And what happens next? Then over the next 2 months, we grow, update the high of this red candle that formed the engulfing pattern, basically trigger stop losses, and then drop sharply down. Why shouldn't we assume that something similar is happening right now? First of all, this candle clearly marked a move downward. I'm talking about the November candle. The December candle, well, it doesn't really contradict this decline, although it turned out to be a step in a sideways movement, right? Is that possible? Yeah, it is possible. Here, we can see it right here. And even here, there was a similar situation. So what happens next? This month, we updated December's high, right? So in fact, all the stop orders were triggered. Everyone who went short and placed their stops above the high of the closed month, expecting a drop. We didn't quite reach 100,000, although it seemed likely, since the 50-week line would have been tested there. So basically, the short sellers got knocked out, while the long holders didn't have a chance to lock in their profits because they stayed in their positions, since the price didn't reach the target levels. They either got stopped out, or now they're just sitting there wondering when the 50-week moving average will finally come. So overall, taking into account this divergence and the negative direction, that is downward, of the overbought, oversold indicator, the general situation points toward a decline, and a very deep one at least down to the nearest orange target. But I think we won't stop there. The minimum target, I think, is around 60,000, where this level is, right? It's a very important level, and specifically this one, because first we marked it, then a correction started. After that, we tested it with a false breakout, and as a result, a deep correction occurred. That's when Bitcoin fell to around 15,000. So this level is kind of the key support. If we break through it, then our next key support is here in the area of 35,000, this candle right here. And if we break through that, well, then probably this trading range. And right here we have 30,000, this untraded zone. And in what was it? October 23? It turns out that's where it was. That's why I'm leaning towards a decline. Whether we'll see 100,000 or not, I don't know. But technically, it should happen. But that's not a guarantee. But overall, the market is looking down. Is it possible to try to go long right now? I wouldn't recommend going long, at least in the current situation. There are too many contradictions. I've shown them to you. That's it. The video's over. The review is finished. I hope it clarified at least something for you. Well, at least what to pay attention to, right? Like how to use some of the indicators, how to interpret them. I'm off to Ed again.